Hey, hey, hey. Welcome, welcome, welcome. It is time for Ask an Agent. Yes. You know what? I am going to need somebody to give me a new intro because I know you guys are like, what in the world? But I'm super excited to have my guest. We're just waiting for my guest to join in. He should be added any second, but I'm super excited. It says we're adding, and so let's see if it connects because it says we are adding. It says no answer from live guest. So we're going to try this again and see if you get that request to come on with me. Whew. My guess is like we go way back, so I'm super excited to have this wonderful, wonderful person come on board with me tonight. Gonna do a invite and see if we can get her to pop in. And you all just let me. All right. Should see her pop on in just a second. Thank you for your patience. Yes. Hey, how are you? Can you hear me?
I can hear you now. Thank you so much. I don't know
And
what
I
happened.
can hear you as well. I just need you to kind of lower the camera just a little bit and turn it back the way it was.
This way?
There we go. Yes, ma'am.
All right.
Because right now I'm kind of looking at, there we go. Yes, there we go. Yes. Okay, look, I had my glasses off, but the reflection of the light was in my lenses. So I was like, well, let me just make sure the camera's close enough and I'll take them off.
Look, if I take my glasses off, I won't be able to see the questions. So,
Well, we definitely want you to see the questions. So, is your volume turned all the way up?
it is now. Can you hear me?
Okay, perfect. Yes, yes. Loud and clear. So,
Good.
ladies and gentlemen, I am welcoming you to another episode of Ask an Agent. This time we are featuring senior loan underwriter Jameela Ewell. Put your hands together, give me the hearts in the clouds, and just let her know, say hey to her that you're happy she's here. Me and this beautiful soul go way back. I mean, well, not that far back, but that far enough, a good 6 years at least.
Yep.
And it goes by fast too.
Yeah. I think almost, dare I say 10.
Could possibly be.
Yeah.
Yeah. I mean, because I've lived here 15 years, so yeah.
Yes.
Long time.
Yes. Every year.
But people as you have your questions, all you gotta do is just type your questions in the chat. But Jameela, I want to give you an opportunity to kind of share your story. I know I've known you for a long time, and we've partnered together in the past on numerous events on getting information out to people and educating people in and out the home buying process. Of course, the info that you're giving is not just for people who are looking to buy a home, but people who have homes that may need to sell their homes to get a home. We're just looking at the overall aspect of the underwriting process. But before we jump into our questions, what I want you to do is tell the audience a little bit about yourself and how you got here.
Okay. Well, I'm a 27-year mortgage veteran. When I was a young 20-something, I was kind of flitting around and figuring out my life, what I wanted to do. I applied for a job at Chemical Bank. You know, they've been gone a long time, but I applied for a job with them and they stuck me in the mortgage department.
Okay.
Kind of like it happened by accident. And in the beginning, they wouldn't let me do anything but make copies. But I've been in this business so long. Before there was email, we used to have bike messengers that would send closing packages to the attorney's offices. So I've seen this business evolve with technology over the years. And I've done in this business pretty much that you can think of. I've been a processor, I've been a closer, I have been a loan officer, I have been a processing manager, I have been a post-closing manager, I've been in quality control, I've done post-closing, I've done secondary work. So I have done just about everything in this business, and it gives me a good perspective on how all the pieces kind of work together.
You have done it all.
I know. I mean, 27 years. So,
but that's good, because that allows our viewers to truly, truly know that they are getting legit info. Okay?
The inside scoop, y'all. This is inside info. This is inside information.
Absolutely. And so we're gonna jump in with some of our questions here, and I may need to ask Leo here to elaborate just a little bit, because Leo just says we are in the market to buy a home. We have $10,000 saved with an extra $3,000 to spare. So I'm not sure if Leo is asking, well, how much money does he need to be able to purchase a home? What are underwriters looking for? I think that's a good place to start. And then if we're not answering his question, I'm sure he'll chime in with more info for us.
Okay. So I would say, if you have money saved, that's always great. You just want to make sure that you find a home that works with the money that you have saved for the down payment. Okay. So a great loan officer is going to make sure that you get into the right loan program. You're going to be able to tell him, this is how much money I have. You know, I suggest that everyone apply and get a pre-approval. I never discourage people from applying, because two things happen when you apply. Either you're going to get approved, or you're going to find out what you need to get approved. And in my purview, that's a win-win. That's not a loss. Even if you get a decline up front, now at least you know what you need to do to get approved, and you can go out and take action and make that thing happen and reapply in another 6 months or 3 months or however long it takes to get that together. But having money for a down payment is a great start. You need a realtor like Cole, or you need a great loan officer that's going to put the right program based on your current financial situation.
That's absolutely right. You do need a good realtor like Cole. Out of all that, that's all I got out of what you said.
Look, get a realtor like Cole.
Don't pay me no attention, y'all. Just get the info that you need, okay? Because I am a clown, and I am a clown when me and Jameela get together, okay? So this is going to be a fun one. But Leo does thank you for that info, because that is what he was getting at, trying knowing how much was needed. But the most important thing that, I'm sorry, go ahead.
I was just saying, money is a great start, and for a lot of people, that's their biggest hurdle. So if you already have some money saved up, then you are ahead of the game.
Absolutely, absolutely. So you also said that money is a great way to get started, but no matter what, you encourage everybody to apply.
Absolutely.
Okay? And I want to know why. You briefly, you mentioned it in your statement just a second ago, but I want to focus on it a little bit more, because a lot of times I have people that come to me and they go, but I don't want my credit pulled.
Well, I mean, that's part of the process. And it's not a bad part of the process. It's a good part of the process, because I suggest that everyone, there's ways that you can pull a legit, and again, I say legit, free credit report with the actual bureaus once a year. Once a year, you're entitled to go on and pull your own credit report so that you can see what all three bureaus have. So if you're concerned about having the credit inquiry sitting on your report and how that may or may not affect your score, you can always go out and do your own soft pull, look at it yourself. But in my opinion, everyone needs to apply. They need to get with a great mortgage professional who can go over that credit report and tell them what is an obstacle and what is not. Because a lot of times I see people spending money paying off items that we as underwriters don't necessarily need to be paid. And that's money that you could have put into closing costs or your down payment. And a lot of times I see people that have a collection account, that they could have the ability to pay that might be standing in their way, and they just know it. So having a credit professional, a loan officer, pull your credit, sit down with you and go over what's on your report is a great way for you to get an idea of exactly what you need to do. You might not need to do anything. You might be right as rain, and you just think because you didn't pay a medical bill from 10 years ago that you're stuck. That doesn't mean that you're stuck. So I always say it's better to apply so that you know what's going on. And then you can always take that pre-approval to Nicole, find you a house if you get approved. If you don't, you know what to do to get it fixed.
Absolutely, absolutely. Great info. I actually had a question come in from someone who let me know they weren't going to be able to get on the live. And what they wanted to know is, well, say that I already have a mortgage and I'm thinking of buying a second home, even if it's an investment home, what are you guys looking at in terms of getting a second mortgage when I already have one?
Okay. So second home and investment properties from an underwriting standpoint are two completely different animals. Okay, they're two completely different animals. There are parameters around second homes because obviously you can't, from our standpoint, a second home is not income producing. So you're not going to be renting that out. You're not going to be Airbnb-ing it. You're going to be occupying it yourself for certain times of the year. And that home has to be available for second home occupancy. And the deal has to make sense, right? So if you in Charlotte, you're not necessarily going to buy a second home in Concord. So one of the things that underwriters look for is that maybe you live in Charlotte and you're buying a second home in Florida or in Hilton Head or in some other resort type of town. And what we'd be looking for is to make sure that all of your existing mortgage payments are current and that you can afford both mortgage payments with all of your debt. You want to be able to have your income support all of your debt plus the house that you're living in plus your second home. Now for investment properties, that's a little bit different. You're going to need a little bit more money down possibly. You're possibly going to need some extra money in the bank depending on what program you go with. And also for those, we're also looking, you may or may not be able to use potential rental income depending on what program you go into. But I would just say for investment properties, just make sure you have some additional funds, not just the money to close, but you may need some additional money hanging out in the bank because we want to make sure that we know as a bank, if you fall on hard times, the first house that's going to go into foreclosure is not going to be the house you live in. It's going to be somebody else's house where somebody else is living. So in our purview, that home is a higher risk than the house that you're actually living in. And so because higher risk, we want to make sure that you have a little extra cushion in the bank in case of, something were to go left.
That's real good because it's the truth too, because when COVID happened, a lot of people ended up being laid off.
Correct.
And things started to change because of that. What are some major changes that you have seen from an underwriting perspective occur with the banking industry since COVID occurred?
So with COVID, we got stacks upon stacks upon stacks of new guidelines that had to be followed during the pandemic. So we're being extra stringent to make sure that you are still working at the time of closing, that any kind of overtime or commission or bonus income that you may be using hasn't deteriorated because of COVID. And we know that certain businesses are just closed.
Yeah.
We had people that applied that just were not working. So the gyms were closed, restaurants were closed. And so we were being extra diligent to make sure we're getting a lot of guidelines around making sure that people's businesses are still open. Self-employed individuals are going to have to work a little bit harder during COVID in order to get their loans across the finish line to the closing table. I mean, they're going to need, to prove that they have the assets to support the business, that the business is still open and operating. We are diligently doing things on the internet to make sure that your business is open and operating and functioning at the time of closing. So this is just a little snippet of the stacks upon stacks.
We don't want to bore you with all the details.
Right, but that's the major. We have to ensure that people are working, income is coming in, and that all their money hasn't been depleted from the time they weren't working.
That part.
That part. Yeah.
Now, Jameela, I have, when I have a client who goes under contract, I have these 10 commandments that I send out of things that they should not do. What's some things that they should not do once they are under contract?
Okay.
Or better yet, not even under contract, once they get their approval letter from their loan officer.
Say, once you apply and you hit the send button on your application, that's when all of these things I'm about to tell you are going to start. Not even when you get approved, but once you hit the button, once you hit send on your loan application. Let's go back a little bit first, though. The first thing I want to say is that underwriters want to know when they apply, do not lie on your loan application. Do not tell half truths. Do not leave out pertinent information. Don't say, well, my child support's not on my credit report. They're not going to find out. Just go ahead. There's a little section that asks you if you pay child support. Just say yes. Say yes and put the amount, because we have processes in place. We're going to find out. And when we find out in the middle of your transaction, items that you left off your application, it lengthens the loan process. It makes us ask a whole lot more questions, and it causes all kinds of red flags to happen. So it's just better to do what your mom told you when you were in kindergarten and tell the truth the first time. Okay?
Yes, tell the truth the first time.
Okay, if we would just be truthful the first time, then you don't want us finding out. I mean, we have all kinds of resources to find out about you, your undisclosed debt, things that are going on behind the scenes that are not on credit. It just makes good sense to just tell the truth and tell the whole truth on your loan application. Don't leave anything off. If you have a question about whether or not something should be included, ask your loan officer. And if you have a great loan officer, he's going to tell you to put it on there. Now, if you get somebody who tells you to lie or tries to help you lie, run like your hair is on fire, because mortgage fraud is real. Banks do press charges against people, and those are federal crimes. These are not little state and local charges. It is real. I have seen people get locked up for mortgage fraud in my 27 years that work at the bank and that applied for a loan at the bank. So I just want to, first thing we want to say is, let us know everything up front so that we can do the job properly. All right. The second thing I would say is that only provide the documentation your loan professional asks for. If your loan professional asks for 1 month's pay stubs and 2 months bank statement, please don't give him 6 months pay stubs, 2 years tax returns, and 6 months bank statements, because if you do, everything that you provide has to be reviewed. And it can cause more problems. It can cause more questions to be asked, and it can definitely lengthen the loan process. Okay, it's going to make the process harder and longer. So only provide what they are asking you for. They're only asking you for minimum information for a reason. It's because that's all we need. If we need more later, we have no problem asking for more later.
Right.
But don't try to overdocument your file. We do see people that want to impress us with their millions in the bank. We don't need it. We don't need it. So just only give them what they ask for. Number 3, when you apply, have your documentation ready. So when they're asking you for documentation, it's a lot if you don't wait 3 weeks, 2 weeks to provide the documentation that we do ask for. have it ready. You're going to need pay stubs, bank statements. If you're self-employed, you're going to need tax returns. You may be asked for profit and losses. You may be asked for letters of explanations for weird addresses and weird inquiries on your credit report. And so when we ask you for things, it helps the process go a lot smoother if you're on it, or if you're put that loan officer or that processor's number in your favorites so that you get information right away. Here's a big one. Don't borrow money during your loan process. Once you apply for a loan, do not apply for another loan. Do not try to buy a car. Do not try to buy furniture for a house you have not purchased yet. Do not try. So, I mean, don't apply for a bunch of credit cards. Wait until after you close. After you close, then you can go out and apply for furniture and Best Buy and all the things that you need, but don't do that during the loan process.
Absolutely.
So I have some questions that I missed. So
yeah, that's okay. Let me back up. I'll tell you what our questions are. You're doing fantastic giving out this info, by the way.
So are you. Thank you. You make it easy.
Okay, so you told us earlier you've been an underwriter for 20-some years. Someone's question is the loan process the same for a bank versus a credit union versus a mortgage company?
Okay, so pretty much yes. Where people get jammed up is they go to a mortgage broker instead of to a bank. And there is a huge difference. A mortgage broker is going to help you find a bank. And they're usually going to charge you money to help you find a bank to apply for a loan at. In the technology age, you don't need someone to help you find a bank, right? So make sure that when you go to apply, that you're not at a mortgage broker, that you're at a mortgage banker, credit union, the bank that's actually going to lend you some money, not refer you to another bank that's going to lend you money. Does that make sense?
Makes sense to me.
A lot of people
I hope it makes sense to our audience.
They think they're applying at a bank and they're not.
Yeah, yeah.
Or a broker who's going to help them find a bank.
Right. And just make sure, if you are someone who's just kind of Googling online and trying to find what company you would like to officially apply with, ask that loan officer or that person that you're getting ready to do the application through their website, hey, I want to make sure, are you a mortgage broker? And just ask the question.
Right. Are you a bank? And you should see their license information on their website. You should be able to research their license information on the internet to make sure that who you're dealing with is legitimate, because you don't want to be taken in by crazy people who just want your money. So make sure that you're dealing with a lender who is reputable, who you can research online and they have real license numbers and they're an actual bank.
Yeah, absolutely. Is there a list of documentation you need that you can review before applying?
So the typical documentation you would need: pay stubs, W-2s for the last 2 years, and 2 months bank statements. That's kind of you're going to be your base, right? And when you get with your mortgage professional, they may ask you for only 2 of those pay stubs or 1 of those bank statements. But when bank statements in particular, when you're about to hand over your bank statements, be prepared to document any large deposits that are outside your payroll, okay? So if Aunt May gave you $50,000 to buy a house, God bless Aunt May, we're going to some of her information. And we don't want Aunt May to be offended, but that's just how that goes. If you get gifts, that kind of thing, those have to be documented. So prepare your gift donors that if you give me this $10,000, Aunt May, to buy this, Aunt May, you're going to have to sign some things and you may have to provide some information. in order to prove you're the one who gave me the money and the money didn't come from ill-gotten gains or terrorist organization or, you know, someplace sneaky freaky. We need to make sure that the money came from a legitimate source. One thing I want to say about money, don't take out a cash advance. Do not take cash advance off of your credit cards for money to close, because we won't be able to use it. We'll subtract it out of the balance of your bank account because those funds are unsecured. If you need to borrow against a property you own, that's one thing, but don't take cash advances off of credit cards, because that money typically cannot be used in a mortgage transaction, in a residential mortgage transaction.
Okay, so there's a follow-up question to that, and then I'm gonna go to the other questions you also. I haven't forgotten about your questions, but in terms of gift, it says, so if you gift a child money for a home, they want the info.
Correct. Correct. And we are diligent about who you get the gifts from. So if you say, I got a gift from an immediate family member, that's typically acceptable. There are some programs that will not allow cousins because they feel like that's too distant of a relative, or maybe not a relative at all. You know, we love our play cousins. And so, and plus we want to make sure that the person you got the money from had the money to give you, and that the money is not being, you would be shocked how people try to commit fraud by funneling money from unacceptable sources. I see it. And more often than I'd like to see it. So they want to make sure that when grandma or your mom or dad or whoever gives you money to close, that they actually had the money to give you and the money hadn't been funneled in from someplace else. So that relative is probably going to have to provide bank statements or a canceled check or something, depending on the loan program, to verify that the funds came from their personal account.
We have the question, how do you shop mortgage loan rates? What do you recommend they do? Properly shop.
What I say that mortgage rates are like legalized gambling. I mean, they fluctuate, they move based on all kinds of, you know, market activity, what's going on with the economy, the country. We all know that, you know, mortgages, the mortgage business helps to support the economy. And so right now rates are lower than I've seen in a long time. But I still go back to do your research on the internet. If you're using a website like Quicken or NerdWallet or whatever, you can certainly do that. But if you have a real estate agent that you trust, 9 times out of 10, they will have somebody that they work with that they trust. And the two of them can work in tandem to get you into that house.
Absolutely, absolutely. Now we have, what if you have a work history of 6 years at one job, 5 at another, 10 at another consistently, and just started a new job about 2 months ago? Apply for a loan, it's in underwriting, but the new job is causing work history issues. What are the odds of being approved?
Well, it sounds like that the work history was pretty consistent. So what I'm looking for in that scenario, first of all, it depends on what program you've been in. It depends on how long you were out of work between there. You may be asked to explain what happened in that gap period. Does the income on the new job support the house that you're looking to purchase? Can we document that income because you just started there? Will the employer work with us to give us everything that we need in order to verify what your new annual salary is? And if it's in the same line of work and you haven't been job hopping around, you know, for the last 2 years, typically that's something you can get around. If your new job is stable and we are fairly confident that you're actually working, that you now have pay stubs, then that should be something that you should be able to work out, especially if you're in the same line of work. Now, if you were let's just say, for example, you were a police officer for 20 years and now you just opened your own business. That's a completely different scenario. Because now you have a brand new business. We have no history of you earning any money in that business. We don't know if your business is going to be successful. We don't know how much money your business is going to earn you. And we do not lend on future income. I want to say that again. We do not lend on future income. So when you say, I'm due for a raise in 6 months, come back in 6 months. Because I can't lend money on the money that you may or may not receive in the future. Does that make sense?
It does make sense, and I'm glad that you said that, because I actually had a client in Atlanta who was asking me about that the other night. They're like, hey, I do contract work. All of my work is contract work. I do have W-2 work, but, you know, I just signed a new contract that's going to pay me X amount of dollars over the next year. So it's good to know future money don't count.
It does
What
not.
do you have now?
In her case, if she's a contract employee and she has a history of contract income over the last 2 years, and she's still currently doing that, and she's got a history of it, then we may be able to work with that. But if you have no history of ever doing what you're now currently doing, you can't document the income that you're saying. That's where the rubber meets the road, is with documentation. We have to be able to document it. We have to have something that shows this is what she's earning consistently, and or he or she is earning, and we have a good expectation that that's going to continue.
And so back on the job question, I'm sorry, now I have a list that people had sent me before. So with the job, I have someone who's with a temp agency, has been with a temp agency consistently for like 3 years straight, and they just give her 1-year contracts with that temp agency. Is that good, or do we need to kind of find some permanent employment?
Well, she's got a history of temporary employment. And if she's currently working, there are programs that are out there that will allow, that have we have programs around everything. We have programs around Section 8. We have programs around temp employment. We have programs around child support income, around all kinds of stuff. There's even a guideline around SUSU money. Remember when everybody was doing SUSU?
Yeah.
It's actually called pooled funds. So there are actually, like, these agencies know what we're doing, what we're trying to do out here in these streets to get these houses, right? And so they write policy around it. So again, always apply so that you can see what is doable with your specific situation. Just because you're a temp employee, if you've been doing that for a long time and you can document the income that you're making, there are some teachers that only get contracts once a year. Technically, that's temporary. But if and that's what you've been doing, I mean, we're not going to tell a teacher you don't qualify, you know, I mean, unless you really just don't qualify, like you're buying too much house. Right. But what I'm just saying, there are lots of jobs where people only get contracted out once a year. If you have a history of it, it's stable and consistent, then there is policy around it. Is that a guaranteed loan approval? No, it's not a guaranteed loan approval. However, it's worth trying because there is policy around it. And if your situation fits the policy, then your house. Contrary to popular belief, underwriters are in the business of approving loans. We don't like to deny them. We try to find ways to approve loans. That's what we're in the business to do.
Yeah, you want to make it work for people.
We want to try our level best to make I mean, our job is to analyze risk and to make sure that you have the ability to repay the loan. And if we can do that, we're going to try to find a way to make it happen. Can we do it 100% of the time? No. Sometimes no is a blessing. We just have to say no. But sometimes you may think you're in a dire situation and you're not. Things can be worked out. Always apply. I can't stress that enough.
Now, as an underwriter, are you seeing, or is this being done TBD, to be determined, is what I'm trying to say, to be determined loans? Are you guys still doing a lot of those or seeing those?
You mean
since COVID?
Determined?
Meaning it's you've already you go through the whole underwriting process and you weeded out all those issues and you say, all right, now your approval is based on you going and finding a house.
Yes, banks are still doing pre-approvals. Banks are pre-approval loans, no property address. You
With
don't
no problem.
right. You don't necessarily need a property address to apply for.
No, but I mean like with these crazy situations, like for example, the temp girl, would you recommend her going through full underwriting? Because here's why my clarification question is coming in. Okay, excuse me, allergies. Clarification question is coming in because what we're telling people is, you know, to be pre-qualified versus being pre-approved is pretty much stated income versus what you've proven. But I'm talking about not just you've proven this and you've turned it into your loan officer, but it's actually been submitted to the underwriter, and the underwriter has taken a look at it and said, well, you know what, actually based off of what you are sending in, you are good to go.
Okay.
And that kind of, to my understanding, cuts down the amount of time that you need in underwriting when you do find a house, because now everything else was already done. All we're doing is ordering the appraisal for the house and, you know, title.
I love the idea of doing the whole loan process so there's no surprises. You have a loan approval from the bank with an expiration date on it. Now, once that approval expires and we start having to repull credit and get new documents and everything's expired, that's different. But if you're in a situation like that, where it's kind of on the fence and you're not sure if your income's going to make it, I say you go through the whole shebang.
Yeah.
And get a real approval in your hand. And then you can go out and do what you need to do with that approval, and just try to do it before that approval expires. So be ready. You know, be ready to go out and look for houses and, you know, do what you need to do. If you get a pre-approval, these houses don't stay on the market long in this year market. So be ready.
You're absolutely right. Yeah, you're absolutely right. They don't stay on the market. I'm licensed in North Carolina, South Carolina, and Georgia, and anything under 500,000 is flying off the market. You're in multiple offer situations.
Right.
You're begging the loan. I mean, people are calling the loan officer to verify that the info given, this is a legit letter. Are you sure you can close this loan?
Right.
To make sure that your buyer is a good viable buyer for their seller. So yeah, absolutely. Well, you have another question.
Okay.
Did you have something to say? I'm sorry, I cut you off.
Say, if you get your pre-approval and you hand in recent documents like dated within 30 days of when they're asking for them, like your pay stubs and your bank statements are recent, your pre-approval should last 120 days. Now, you may be asked for some updates prior to closing due to COVID. They may ask you for some updates, but that pre-approval should last you 120 days.
Nice. Nice. Y'all hear that? Yes. All right, we have, can you get assistance with a loan if you have a loan on another home outside of North Carolina and it's not your primary home? I live in Charlotte and the home is in South Carolina and my sister lives in the home.
Whose name is the note in? Who signed the note for that loan? Because if you signed the note as a co-signer, that's your loan. It doesn't matter who lives there. And you're going to be responsible to prove you can support that mortgage payment and the property expenses. So if the taxes and insurance and homeowners association dues are not included in that mortgage payment, you're going to be asked to document all of that to make sure that all of the property expenses, that your income can support the new house you want to get and the one that you currently own. So just, if you sign the note, it's your loan. And that's what I tell, like, even my children, I tell my friend, I tell everybody, stop co-signing for folks. If you want to buy a house, if you're in the market to get a house, that's not a good time to start doing favors and jumping on other people's credit. If that makes any sense.
Yeah, definitely. Now we have, what is the desired housing expense ratio or percentage underwriters like to see when keeping current property
while keeping a current property and purchasing an additional property, considering you have no other debt except for the current home. So the only debt they have is their current mortgage, and they want to buy a second home. What is the debt to income ratio you guys are looking for?
It depends on the program.
Okay.
So I can't really answer that question. There's no one answer to that question. Because different loan programs have different criteria, and so it's difficult for me to answer that question. But here's a good rule of thumb. I tell people, if you're going to try to, because what we tell you can afford, I mean, you're an adult, you really know what you can afford.
Right.
So I always tell people, if you add up your debts and you divide that by your gross monthly income, try to stay under 50%. Now, that's not a program I'm giving you. I'm just telling you that if you stay under 50%, you have a better chance. Does that make any sense? So that's not a hard and fast rule.
No.
Say, oh, the lady on Nicole's live said if I had 50%, I'm saying if you're going to do this yourself and you're trying to be diligent and you're trying to make a determination, stay under 50%. That's going to give you your best shot at loan approval. It's not a guaranteed loan approval, but it is your best shot at loan approval. But we're not going to just be looking at the two houses. We're looking at whatever other debt you may have and the property expenses that go along with the mortgage payments. So
this next question, actually, I think the answer is kind of lender specific. So it can vary from different lenders. But the question is what's the minimum FICO score to qualify for a mortgage?
That is also program specific, not necessarily lender specific, because all of us lenders are really underwriting to the same guidelines. It's just lenders have more programs available than some other lenders might. So I say for best rates, get your score as high as possible. I'm saying just because to mitigate risk, the bank may charge you more if your score is lower. So I always say, go ahead and get you the highest possible, work with a credit person, your loan officer, your home buyers club, to get your score as high as you can get it before you apply, because it's going to work out better for you in the long run. It's going to get you the best mortgage terms. As far as what the minimum score is, some programs have 580. Some programs have 620. Some programs have 680. Some programs have 710. It just depends on what your needs are as a customer. And again, a good loan officer is going to put you in the right program at the right price for where you are today. So again, until you apply, you're really not going to know. But I've seen, it just depends on, there are programs out there that will give people with a 580 score a loan. Such programs do exist. But again, try to get it as high as you can, because you want to be diligent as you can, and you want to try to get the best rate, loan terms that you can qualify for.
So you mentioned the home buyers club, and every loan, every lending entity has a similar program to the home buyers club. What's the home buyers club at your company?
So home buyers club is, suppose you apply for a loan and you go through the process and they tell you, we're sorry, we can't approve your loan today. But you can go into home buyers club, which is kind of a service that they provide, where they'll work with you with whatever's going on with your credit situation or your income situation or your asset situation. And they get all of that. They work with you to get all of that cleaned up. And then they tell you, okay, now today you're ready to reapply. you should be good to go for loans. Lots of the bigger lenders have that kind of a service. So you can just ask them, do you have a home buyers club, or do you have some kind of program for people like me who have been denied, like where you'll work with me to get these situations fixed? A lot of companies have it. So always ask the question if you get denied. Ask your loan officer, do you have something like some kind of service that you guys provide to help out with these types of situations? Tell me what I need to do.
Girl, you are good. These questions is just rolling in. All right. Now, earlier you talked about that going through the full underwriting process, weeding out all the difficulties and taking care of all those conditions, then that approval could last about 120 days. But if you don't go through that, how long does a typical pre-qualification or pre-approval last for?
Now that's lender specific.
Okay.
That is specific. Having the whole process, we don't have documents to go off of. We don't have enough information. And so some banks are not even doing that, I don't think right now, but some are, and those will be lender specific. So I can't really answer that question.
Okay. Then we have, what happens if you owe back taxes?
The IRS is a problem.
Sneaky bastards.
The IRS, they have a tendency to jump in front of the bank's lien position. Okay. So typically, if you owe back taxes, we're going to ask you to either pay those taxes in full or set up a payment program. And then some programs even make you make a certain amount of payments on time to the IRS before you can close. So that's something that, you definitely have to take care of, from the aspect of either paying it off in full or setting up loan payments, and those are included in your debt. So what we see is once we add those payments into the debt, it blows people's debt ratio out of the water and they have trouble qualifying. So it just depends on, the kind of payment arrangement you make with the IRS. But closing with an open, and anything that's a lien already, like if you already have a judgment or a lien from the IRS, that can really be problematic. So I would definitely try to take care of those. But if you just owe back taxes they're not with a lien, you don't have any judgments, nothing like that, the IRS isn't garnishing your wages or freezing your bank accounts, then you can typically, they nasty. They want that. They worse than the loan shark, IRS. Then if you set up a payment arrangement, we can include that payment arrangement in your debt, but sometimes it still takes longer because you have to make for some programs, you have to make a certain amount of payments first before you can close.
Now, you keep saying program specific. Is there a way to kind of research these programs? Like, can we Google and find out what all these programs are and what each specific program requires?
You can. They can be very hard to navigate. I'm just being honest with you. Fannie Mae has a website. HUD.gov is another website for FHA loans. If you're a veteran, you can go on to the VA website. There's plenty of information there about what the wonderful programs that we have for veterans. USDA has a program. Every county, city, state has bond programs and down payment assistance programs. You can do all of that online yourself, or you can contact your local loan officer and ask him to do the work for you. That's their job. Their job is to get you into the right program based on your needs, not their needs. You tell them what your needs are, okay? You tell them how much money you have. You tell them how much you think you want to spend on a house. You tell them, I've never bought a house before. You ask them, do I qualify for down payment assistance? There's money out there to be had, people. Go find you a loan officer. If you're a first-time home buyer especially, and ask about that free money. It's out there.
Do you recommend paying things off on your credit report?
It depends on what it is. Some things, you don't have a choice but to pay because they could become a judgment or a lien. Other things it might not be so prudent to pay. That money might be better spent elsewhere. Again, I would get with a mortgage professional or a credit to answer those specific questions, because sometimes paying off things can work out great. Sometimes paying off things can actually drop your score if you're not careful, if it's not done in a specific way. And so I would say before, I believe, you pay what you owe. Okay. Eventually, I believe now at the time that you want to apply, I would say if you haven't paid it yet, you might want to get with a mortgage professional to go over the credit report with you to tell you what needs to be paid, what doesn't. So you're not wasting time and money and precious resources on things that I might be ignoring when I look at it. But a buyer beware with credit repair. I always say that, because a lot of times people pay for credit repair agencies and they get bad advice. And then when the loan gets to my, I have to deny it because of something that happened in credit repair. And I hate to see that, because I know people pay good money to have their credit repaired, and it works in reverse if it's not done properly. And so just make sure that you're using somebody reputable.
And that's why at the beginning, you also talked about going to the loan officer first and letting the loan officer say, hey, listen, I pulled your credit based off of what we see. If you do X, Y, and Z, we can get you ready. But
and how,
or you know what, you're in a good position. Let's move forward now.
how about this? That's free.
That part. It's free. I had a young lady this morning. I sent her to a loan officer, and after she talked to the loan officer, she called me back and she was like, did the loan officer call you? And I said, well, they don't tell me your personal business unless you give them permission. And she said, oh, I told her she could talk to you. I said, okay. Well, do you want me to call her? And she said, yes. So I called the loan officer, and loan officer said she was terrified to let me pull her credit. You can't be scared. We got to fight. Knowing is half the battle.
What it is. Look, don't be ashamed. Don't be ashamed. Things happen.
When you know better, you do better.
Things happen. Things happen to all of us. And, eventually these things have to be dealt with, but there's no shame in it. Trust me, we see this stuff all day. Whatever you got going on is no worse than the person I saw before you or the person I'm going to see after you. So there's no shame in it. Things happen. We know that things happen. We understand that things happen. It's just, until you pull it and take a look, you don't really even know what you're dealing with.
And here's the thing. I think a lot of people don't want their credit pulled because they think that you all are sitting in a place of judgment.
No, ma'am.
Right?
Nope, not at all. And I mean, it's just like a doctor, right? If you're a doctor and you see people all day of different shapes, sizes, colors, whatever, it doesn't faze you. It's the same thing with credit reports.
I saw 250 reports today. I don't know which one was yours.
Right. Our job is to make sure you have, like I said, the ability to pay, to repay the loan, and to analyze risk. That's our job. It's not our job to judge what happened. Now, we may ask what happened because we want to make sure you're not in a situation where it's going to happen again, but it's not because we're in a place of judgment. We just, are trying to figure out your financial situation so we know you have the ability to repay. That's all.
Okay. We always want to be conscious of everyone's time. We are at the 8:30 mark, but we have one last question. And then we will let you all go. Like I said, this was a good one. And y'all was hitting her with all the questions. Okay, so last question. You talked about the Home Buyers Club. Is there a way to get in that program before applying for the loan so that your credit is as high as possible?
Ask your loan officer, because that is lender specific. Not all lenders have such a program. So you may have to research to figure out which lenders have that program available. Cole, one or two. So
I got a whole team of them.
So ask
That's right.
what you need, okay?
Absolutely. Well, Jameela, thank you so much for joining us tonight. I really, really appreciate you taking time out of your busy schedule, honey. It has been a pleasure. Ladies and gentlemen, thank you for joining in tonight. Next week, we will have a loan officer on Tuesday night. That is going to be George Wise of Summit Funding. And then on Wednesday, I'm actually bringing in a therapist because sometimes this process can be a bit taxing.
I might
Okay.
start that one.
So that's Tuesday and Wednesday of next week. Again, Facebook Live. You'll see me start posting in a couple days about those. But again, I thank you for your time. We'll see you next week.
Right.